Hello everybody and welcome to today's special event. I'm Terry Ryder, founder of hotspotting.com.au, and today we're going to be seeking to answer the question, why invest in Brisbane? Explaining why Brisbane is fast becoming the hottest of markets across Australia. And I'll be working my way through a presentation of slides with lots of data and information, and trying to make some sense of what's happening in the Brisbane market at the moment and why we think it's going to be one of the very best places to own real estate moving forward. I'm also going to be talking about a special report that we've written, which is called Why Invest in Brisbane. This is a high-level report for real estate businesses, which we will provide to a small number of clients with their branding and contact details. These will be real estate businesses that have an interest in the Brisbane market as real estate professionals and may find a use for having a report with their branding and contact details, which explains to people who are potential customers why Brisbane is the place to invest. So I'm going to share my screen and start moving into the presentation. And just a reminder that if you do have any comments or questions, could you please write those into either the chat box or the Q&A panel that you should see in front of you. And in the final, perhaps 15 minutes of the hour, I'll be dealing with questions. So. But bang them in as they occur to you in the chat box of the Q&A panel. Okay, so everyone wants to own a piece of Brisbane. That seems to be the case increasingly. All the anecdotal evidence coming out of Brisbane supports the factual data, the statistical evidence that Brisbane is fast becoming one of the hottest markets in the country, with property selling very, very quickly and at prices that even the vendors and the agents weren't expecting. So let's just begin by referring to this. This slide actually appeared in a presentation I did in September of last year, so just over a year ago, and a webinar that I was giving. My forecast for 2021 was a nationwide property boom to happen this year. In many locations, the boom is already underway, especially regional Australia. And my comment was that it will be led by the regional centres and the smaller capital cities. Fundamentally, that forecast has been proven correct, with one exception, and that is that Sydney has actually been the location marginally with the highest growth in the last 12 months in prices. So what we have on screen now is, according to CoreLogic, the figures published on the 1st of October, just less than 2 weeks ago, how much median house prices have grown in each of the major market jurisdictions across Australia. Sydney is up 28%, but beyond that, it's very much being led by those smaller capital cities like Canberra, Hobart. Brisbane is doing very well, but I think it's going to do better. And of course, regional markets, including regional Tasmania and regional New South Wales, which are almost as high as Sydney in terms of the growth that they've had in the last 12 months. In the last quarter, according to those figures published about 10 days ago by CoreLogic, we can see that Brisbane is almost top of the tree in terms of growth in its median house price. In the September quarter, Canberra is actually number one, up 7.5%, which is extraordinary because it means if that was annualised, or if that rate of growth continues for the next 12 months, they'll be growing at around 30%. Brisbane 6.5% is the second highest amongst the various capital cities and regional market jurisdictions. Not every location, Western Australian Perth was lagging a little bit in those figures, and regional, just go back up to that slide. The Northern Territory is the only location that didn't produce some level of growth in the most recent quarter. And of course, as you can see from those figures, most locations produced growth of at least 4%, and several of them above 6%. So one of the key points about what's now happening in the Brisbane market, that it's finally actually starting to deliver, because for the last 3 or so years, various commentators, economists, people writing in media have at various points forecast that Brisbane is going to be a boom market. You can see from some of the headlines that I've put on the screen there back in February 2018, Brisbane to be the best performing market. In June of that year, Brisbane to lead the nation in price growth. Earlier in 2019, more headlines. And it didn't actually happen. Brisbane didn't lead the nation on price growth in 2018. It wasn't the number one hotspot in 2019. And really last year, nor was it in last year to be the city with the best price growth prospects. So I think the fundamental reason, which I'll talk about in more detail as we get more into the presentation, the reason why Brisbane hasn't fulfilled the expectations that so many people had for it, is that the underlying economy was not as strong as other places. And one of the things that was massively lacking until very recently was a significant spend on infrastructure. That's one of the things that's changed. So at last, the evidence very, very strongly, both in the statistics and anecdotally, and what we're hearing from talking to people at the coalface of the industry, is that Brisbane's time to shine has arrived at last. And I'm now going to talk through a series of reasons why I believe that's the case. Reason number one is what's happening with sales activity. So every quarter, we receive data on sales activity, sales volumes for every town and suburb across Australia. And we analyse that, particularly to produce our quarterly report known as the Price Predictor Index, because what we know to be true from our many years of experience in researching and analysing real estate markets is that sales activity is a good forward indicator of what's going to happen with prices. If sales activity is rising strongly, then prices will follow. Sales activity is falling away, then prices in those locations will probably stop rising and may even fall. So what we've seen with Brisbane is that in the last 12 to 18 months, there's been a remarkable uplift in sales activity. What we're looking for when we analyse these figures for each city, for each local government area, we're looking at the number of suburbs where there's a strong pattern of rising sales activity. Across Brisbane, the last five quarterly surveys ago, there were only 28. Then in the next survey, it doubled to 56. And the one after that, it doubled again, more than doubled again to 124. So now the most recent survey, we found 163 suburbs with rising sales activity across the Brisbane metro area. And that's the highest by quite some margin that we've ever recorded in the 6 years that we've been conducting these quarterly surveys. And if we look across the different precincts of the Brisbane market, Brisbane's a little bit different from most capital cities. Most capital cities have many dozens of local government areas. Brisbane only has 5. Brisbane City is one of them. Then we've got Ipswich City, Logan City, Redland City, and the Moreton Bay region. So we divide Brisbane City, which is a big chunk of the Brisbane metropolitan area, into precincts: Brisbane North, South, Inner, etc. To break our analysis of Brisbane down a little bit more, and we can see from that the precinct that's got the highest number of suburbs that have got elevated activity is Logan City, the Brisbane North precinct, and the neighbouring Moreton Bay region, also up in the north, also very strong. Logan City is perhaps the most frenetic part of the market, and that's reflected in the figures you see on the screen. The big improver is Ipswich City. 3 months prior, it very much didn't feature in that list, but now suddenly it's sprung to life, and we're now seeing a massive uplift in sales activity in the Ipswich City part of the Brisbane metropolitan area. But there are growth markets right across Brisbane, as you can see from those figures. So uplift in sales activity is the first reason why we believe Brisbane's time to shine as one of the hottest markets in the country has arrived. Second reason relates to lower vacancies, which again I think is a good forward indicator. When vacancies are very low, rents will rise, and when rents are rising strongly, prices have a tendency to follow that lead. So one of the problems for the Brisbane market until very recently is that vacancies have been higher than average, and particularly in the inner city areas. Now you can see on the screen on the left-hand side where vacancies were for the inner city postcodes, including CBD, about 18 months ago, April 2020, those figures. You can see the CBD was 13%. Fortitude Valley, which is right next to the CBD, was almost 7%, etc. And the latest figures from SQM research show that there's been a dramatic improvement in those vacancy rates. The CBD is still way too high, still above 8%. Fortitude Valley is still a little high as well at 4%, but those other inner city postcodes have improved a lot. They've all improved. Three of them are now well below that 3% benchmark. The CBD is still a way to go. And the Brisbane CBD is impacted similarly to the CBDs of Melbourne and Brisbane in that it's impacted by the closure of borders and the fact that universities are not operating as normal. So the normal tenancies, the short-term tenancies and the permanent sort of student tenancies that those markets might expect just aren't happening at the moment. But Brisbane generally has now very, very low vacancy rates. The latest figures from Domain published about a week ago, confirmed pretty much by the figures out yesterday from SQM research, very similar numbers from both those sources on vacancy rates. You can see that 5 of the 8 capital cities have vacancy rates well below 1%. Brisbane slightly above 1%. The only city with a vacancy rate above the benchmark of 3% is Melbourne. And what we also know to be true is that right across regional Australia, vacancies are incredibly low. Our recent analysis shows that 72% of regional markets have vacancy rates below 1%, and in Queensland, in regional Queensland, 80% of locations have vacancy rates below 1%. We have a rental crisis in this country. It's not talked about much by media. It seems to be fundamentally ignored by politicians. There's lots of talk about housing affordability for buyers, but not a lot of conversation about the fact that vacancies are chronically low in most parts of Australia, including in Brisbane. So it's bad if you're a renter looking to be a tenant. In some parts of Australia, you can't find a rental property at any price. But it's a good time to be a landlord. And a lot of people right now increasingly are seeking to become Brisbane landlords. Rents are responding to that. So our recent analysis shows that almost 7 out of 10 Brisbane suburbs have recorded rental growth for houses above 10%, which is pretty strong performance. In Brisbane, on average, according to the latest figures from SQM research, house rents in Brisbane have grown 13% in the last 12 months. So that's actually a very, very high level of rental growth. We generally find that rents don't show the same level of growth as prices, but right now, across Australia and certainly in Brisbane, we're seeing much higher rental growth in terms of percentage increases in house rents than we would normally see. And that's a product of the fact that vacancy rates are so low in so many places, including in Brisbane right at the moment. So that's the second of our reasons why we see the Brisbane market rising in prices to increase at an accelerating pace. The third reason is the price comparison. Brisbane certainly compares very favourably with the biggest cities in terms of its affordability. And again, the latest figures published by CoreLogic show the comparison. We're getting a lot of buyers in Brisbane and Southeast Queensland, out of Sydney in particular, and the comparison there with median prices for houses and apartments show that Brisbane prices are almost, not quite, but almost half the levels of Sydney. And so people in those big cities, Sydney and Melbourne, but also in the national capital, Canberra, looking at Brisbane pricing, and it just looks extremely attractive. The value for money that Brisbane provides is far higher than you get in those more expensive cities. And so what that means is this capacity, I think, for Brisbane prices to grow considerably. I don't think we're ever going to expect them to be as high as they are in Sydney and Melbourne, but there's certainly great capacity for Brisbane to close the price gap. And just another piece of information that supports the reality that more and more people are targeting Brisbane because of its affordability relative to the bigger cities. The latest survey published just a few weeks ago by PIPA, the Property Investment Professionals of Australia, showed that when they asked investors which location or which city they're going to target in the next 12 months for investment, Brisbane by far was top of that poll. Not surprising for all the reasons that we're talking about today. Okay, reason number 4, this trend that's dominating Australia at the moment, the exodus to affordable lifestyle. I see it as the biggest and strongest force impacting real estate at any point of the 21st century so far. A couple of decades in, we haven't seen anything as powerful as this. Right now, we have a genuine national property boom, and it's driven by multiple forces. As I've said a number of times in webinars and podcasts, my list of factors that are driving this price growth have 16 different dot points. But the biggest, I think, the biggest single force is the exodus to affordable lifestyle. People moving out of the big cities to regional areas or to smaller cities seeking affordable lifestyle. Now, media has characterised this trend as something that's been caused by the pandemic, and that's just fundamentally wrong. It's been underway for a long time. Certainly long before we heard of COVID-19, this trend was happening. Sydney's been losing population to internal migration for the last 10 years, every year for the last 10 years. Melbourne for the last 4 or 5 years. So long before COVID came along, people were leaving the 2 biggest cities and moving to other parts of Australia. It's been driven fundamentally by technology. More and more people realising they can work remotely. And what's happened is the lockdown periods and the restrictions have made people realise that they can effectively work remotely. And it doesn't work for everybody, of course, but for many employees and their employers, it works quite well. So it's a trend that's become much stronger recently, and I think it's got longevity. And so smaller capital cities and regional areas are benefiting, and one of the parts of the country that's benefiting the most is Southeast Queensland, which includes Brisbane. So we're seeing a lot of people, a lot of internal migration heading towards Queensland. The latest figures from the Bureau of Statistics show that the greatest beneficiary of internal migration, the area of Australia that's gaining the most population from people moving from other parts of Australia, is Queensland. And what we know to be true is that most of that, not all of it, but most of it goes to Southeast Queensland, Brisbane, the Gold Coast, the Sunshine Coast. So that's the leading beneficiary from internal migration. Factors feeding into that, again, is that relative affordability. The climate is also appealing to people. Access to a lifestyle. Brisbane is on a bay with islands, offshore islands, one of which is depicted there in the image on the screen. The Gold Coast is very accessible. The Sunshine Coast is very accessible. And of course, Brisbane also scores lots of points for its control of COVID-19. Right now, day to day, very few cases, particularly relative to Sydney and Melbourne. There's been some short lockdowns in this part of the world, because I'm sitting in Southeast Queensland even as we speak, but relatively few, and the restrictions on normal life are quite muted in this part of the world, and that's a factor. What we hear anecdotally from agents in Southeast Queensland was whenever Sydney and Melbourne have gone into lockdown, their phones have started ringing from Sydney and Melbourne residents who want to get the hell out of those cities and move somewhere where it makes a lot more sense to them. And so COVID-19 is part of that trend, but also climate, lifestyle, affordability. Reason number 5, infrastructure spending. This is the big thing that's been missing in the mix for Brisbane. When Sydney and Melbourne had their previous boom, which ran from about 2013 to 2017, and it really didn't happen in other parts of Australia. It certainly didn't happen in Brisbane. And the big difference that I saw which explained why Sydney, Melbourne boomed, Brisbane didn't, was that the infrastructure spend. The local economies were much stronger at that point in Sydney and Melbourne, and a big part of that was the massive infrastructure spend that was underway. Tens of billions of dollars being spent on motorways and rail links and hospitals, university campuses. Brisbane at that point was spending almost nothing on infrastructure, and its local economy was kind of stagnant. And so that's been missing, but that's changed. And that's one of the big drivers of the growth that we're going to be seeing, I think, moving forward with Brisbane. Because I think what's starting in Brisbane now is going to continue for the medium term, probably for the next 10 years. We're going to see consistent growth in Brisbane. The next 10 years are going to be much stronger than the past 10 years, which have been in Brisbane fairly mediocre. So the impact of infrastructure, I believe few things impact real estate markets as much as major new infrastructure spending. And it's clear from everything we've seen and heard is that federal and state governments do intend that the economic recovery that they're trying to create is going to be generated in large part by an elevated infrastructure spend. So they're fast tracking everything they can. Anything that's anywhere near shovel ready is being brought forward as much as possible to get things underway, to be creating jobs, be handing out contracts to businesses. Out of all that comes a significant impact on real estate. So the different types of infrastructure that do have an impact, transport infrastructure, obviously, road links, rail links, new ones or upgrades of existing ones to increase their capacity, to make areas more accessible. Also hospitals, also university campuses. What they tend to do is improve the amenity of locations or make them more accessible while they're being built. They generate economic activity and employment. And out of that comes demand for dwellings. And some types of infrastructure, particularly hospitals and university campuses, they actually, there's lots of jobs in building them. There's even more jobs in running them. So there's an ongoing impact from that kind of infrastructure. Now, Brisbane, which until recently was a little bit dormant when it came to infrastructure spending, now is a very big infrastructure spend underway. Some of the examples you can see on the screen, some of those big projects are underway, like Cross River Rail, more than $5 billion. Upgrades going on around the Brisbane and Southeast Queensland areas to the Bruce Highway, Queen's Wharf. In fact, what you see on screen is me standing in front of a camera the last time we did a video shoot down in central Brisbane, and those cranes in the background, that's the Queen's Wharf development, which is a major fundamentally tourism, residential, commercial development, $3.6 billion, very much under construction right now. The airport upgrade has happened, and other things that are underway or very close to starting, and it's really changing the landscape for Brisbane, making the economy stronger, creating jobs, and that's generating part of the demand that we're seeing. You know, people coming to Brisbane to work on these projects, and there were some figures out today showing that there's been a massive uplift in tradespeople moving from other parts of Australia to Queensland, particularly Southeast Queensland, to work on projects. Tradespeople like plumbers and electricians, they have qualifications that apply to their state. When they move to another state, they need to have their qualifications recognised, and those applications for recognition of their tradesperson qualifications, whether they're electricians or plumbers or whatever, have to go to a particular government authority in Brisbane. There's been a massive uplift in those applications in the last 12 months compared to last year and the year before. And that's as a consequence of the new infrastructure spend and the construction of new housing and apartments in Brisbane, the Gold Coast, the Sunshine Coast in particular. And of course, those people moving to Brisbane and Southeast Queensland to further their working careers, they need a place to live. So they're going to be renting or they're going to be buying. So a big impact on real estate from that. It's just one of those infrastructure projects that's going to have an impact. The M1 is the motorway that links Brisbane to the Gold Coast. It's in Some places it's 4 lanes aside, and most of it it's 3 lanes, so 6 lanes or 8 lanes in total. But it's not enough. It gets very congested, particularly in rush hour. So they're actually duplicating. They're building a duplication of the M1 to take pressure off the M1, and the early stages of that are going to be $1.5 billion. First stage is called the Coomera Connector, linking the northern parts of Gold Coast City into Logan City, which is the sort of the southern suburbs of the Brisbane metropolitan area, which is kind of merged with the Gold Coast. So that's a project that's very well advanced, and it's going to be having an impact amongst the many others that I've mentioned. It's useful to be aware as investors that major new infrastructure can have 3 different phases of impact on real estate prices when the project is first announced. There can be an impact on real estate values in the affected areas because investors and perhaps home buyers sort of targeting purchases in those areas in anticipation of benefits. But that can be a little bit risky because politicians have a tendency to announce big projects when there's an election in the offing and then kind of forget about them later. So the safest time to invest with new infrastructure in mind is when construction actually starts, because you can then have some level of confidence that it's going to actually happen and be finished. Not always, but usually. And so there's another impact then. And then when it's finished and operating and people can touch it and feel it and see the benefits, then there's a further impact. So the brave, the risk takers will perhaps buy in anticipation of benefits from a newly announced infrastructure project when it's first announced. But that's a little bit risky. People are a little bit more cautious, might start buying in anticipation of benefits when construction actually gets underway. Useful to know. Okay, so working for our reasons why I think that Brisbane's time to shine has arrived. And reason number 6 is the recent price uplift. I don't think Brisbane has anywhere near fulfilled its potential in terms of the price uplift that we'll have. I think it's going to extend over many years. In fact, I think for the next 10 years at least, I think Brisbane's going to be a place of real estate growth far in excess of what's achieved in the previous 10 years. But one of the indicators is the uplift recently, and we can see the pace of price growth accelerating in the Brisbane market. So on screen, we're looking at the figures for the housing market from CoreLogic in February. They published figures which found that in that month, Brisbane's median house price had risen 1.6%. In the February quarter, the 3 months to the end of February, 3.8%, and in the previous 12 months, around 6%. Fast forward to the most recent figures in September, the growth was 2%. The September quarter was 6.5%, and the annual growth for the last 12 months to the end of September was 22%. So there's been a massive uplift in price growth in Brisbane. We're comparing February with September, so just 6 or 7 months later, there's been, and we can see from those figures, a huge change in just how fast prices are starting to rise in Brisbane, and I think it's going to get even faster. It's also happening in the unit market, not so much. The Brisbane unit market has suffered in the last 5 or 6 years from oversupply. It's taken all that time to soak up that previous oversupply. We're getting to the point now when they're starting to see a return to growth in apartment values because most of that surplus is now taken care of. Some of the inner city areas still suffering from the higher vacancy rates, but you can again see from the comparison, the annual growth rate back in February for the median unit price for Brisbane was just 1.1%, and the latest figures almost 9%. So in normal times, that 9% growth would be considered pretty damn good. But in the current climate, it's a little bit below par, but it's still evidence that there's a significant improvement in that sector of the Brisbane market. Okay, moving right along, reason number 7. The last of our 7 reasons, and I think this is the game changer on top of everything else that happened. I think Brisbane prior to the recent announcement confirming that Brisbane would host Brisbane and Queensland, it's not just Brisbane, but most of it centred on Brisbane, would be hosting the 2032 Olympics. Prior to that confirmation, Brisbane was already had the credentials to be one of the strongest growth markets in Australia. This is kind of the icing on that particular cake. It's the thing that just takes Brisbane to that additional level. What I'll show you is there's been some considerable research done on the impact of Olympics, and there's a fair amount of debate about it. Some people argue that the cost of staging these mega events exceeds the benefits, the economic benefits. But I think it's all the research that's been done shows that there's an undoubted impact on real estate markets in the host areas. And most of the impact, the evidence suggests, actually happens in the lead up to rather than after the event. And a lot of it's to do with the massive infrastructure spend that's required by hosting the Olympics. Now, keep in mind that it's not just Brisbane. The Gold Coast has got 7 venues, I think, to host Olympic events. In about 10 years' time, the Sunshine Coast has several. Toowoomba will be hosting certain parts of the Olympic, a little bit west of Brisbane. Another one of our current hotspots that we're recommending to our customers. And some of the northern cities like Townsville and Cairns will also get some of the action. And also keep in mind that Sunshine Coast and Gold Coast now have international airports as well, so that's also a factor. But it's investment in sporting venues. Now, one of the reasons Brisbane and Queensland got these Olympics is that they already have a lot of the infrastructure in place, but more has to be created. And one of the things that's been announced is they're going to be spending around $1 billion upgrading the Gabba, which is known to sports fans as where the Test cricket takes place and also where the home games for the Brisbane Lions AFL team happen. And it's a very fine facility as it exists, but it needs to be better to host the opening ceremony and the closing ceremony, athletics, etc., for an Olympic game. So they're going to spend at least $1 billion on that. That's already announced. There'll be other sporting venues upgraded and created, but probably the biggest investment will be in the transport links, because moving people around. I was in Brisbane when it hosted the Commonwealth Games a few decades ago, and the logistical exercise of moving people around to the venues, getting people, the spectators, as well as the officials and the athletes, is a huge logistical exercise, and so transport links are going to have to be upgraded. And it has been actually suggested that there's the mayors of the various councils in Southeast Queensland get together regularly to talk about, and particularly the infrastructure is needed, because this is one of the strongest population growth areas consistently in Australia, and that puts pressure on infrastructure. And it's been suggested that the mayors decided that the best way to get the infrastructure they needed was to actually stage an Olympic bid, and that's what they did. Got the Olympics, and they're going to get the infrastructure that they want, hopefully. There's also going to be private investment in tourism venues and hotels, tourist attractions. So there's going to be a big spend. It's going to create a lot of jobs. People are going to be coming to this part of the world to work on those big construction projects and be part of it all. And that's going to create a lot of demand for real estate. Now, it's all part, as I said, of the evolution of Brisbane. Going back maybe a quarter of a century, Brisbane used to be jokingly referred to as a big country town, not really a sophisticated city. And it's evolved over time into a real capital city, and further beyond that to a city of note. And I think its next step is to become recognised around the world as a global city. And that evolution has been marked by a series of international events. The Commonwealth Games in 1982, Brisbane hosted the World Expo in 1988. That was definitely a game changer for the city. Brought a genuine world focus on Brisbane and precipitated some major urban renewal and development in inner city Brisbane. It also hosted the G20 summit in 2014, and now the next step in the process, the 2032 Olympics. Okay, just pause while. Okay, fine. Now, in terms of the impact of all of that on real estate markets, a lot of what we get in media when there's a big announcement like the 2032 Olympics, media and the real estate industry tends to talk in terms of a post-games boom. You know, there's going to be a big focus on these locations during the games, and therefore there's going to be a boom afterwards. But what we know to be true from the experience in other places and what Brisbane's experienced with these other events, and also the Gold Coast, which hosted the 2018 Commonwealth Games, is that the greatest impact is actually in the lead up, and it starts for Brisbane pretty much now. There's been some research done by PIPA. I mentioned earlier the Property Investment Professionals of Australia. They've looked at 6 cities that have hosted the Olympics, including Los Angeles, 1984 to Sydney in 2000. And what their analysis showed is that most of the impacts before the event, not so much after the event in terms of the impact on real estate values. And it also tended to indicate that suburbs that are close to the big Olympic venues, the sporting venues that are hosting the major events, tend to have higher percentage growth in their prices than other parts of the city. So the city generally benefits with an uplift in real estate buying and prices, but those locations that are close to the big venues for the Olympics tend to have higher growth. And keep in mind that there's going to be a lot of work happening in those venues in the lead up to the event, that the venues will be finished long before the event, and they'll be used in major events to trial their capacity and make sure everything's working. So there's going to be focus on those venues long before the Olympic Games comes along. Okay, so what PIPA found in its analysis from the time of the announcement that Sydney was going to get the 2000 Olympics in about 1993 up until the event, it was the best performing capital city in Australia on price growth. But after the event, the rate of price growth decreased. PID, chief economist, also did some analysis of the major events in Brisbane, including Expo 88, the G20 summit in 2014. Look at the impact on prices, and found again that there was big uplift in the years leading up to those events. And the biggest uplift was in the suburbs close to the major venues for those events. And both those cases was in the city areas of Brisbane. What I observed around the Gold Coast hosting the Commonwealth Games in 2018 was that whereas the industry tipped a post-games boom, that didn't really happen. What did happen was a kind of a mini boom in the 2 to 3 years prior to 2018, and it was very much around the infrastructure construction effort and the people coming to the Gold Coast to work in those big construction projects and the demand for real estate that are created. So it's all about the infrastructure and investment. That's something you keep in mind when trying to figure out what impact the 2032 Olympics will have on Brisbane real estate. So I think the impact starts now, and it's going to extend for the next 10 years right up to the hosting of the event in about a decade's time. And the biggest risk to the Brisbane market in all of this, another oversupply of inner city apartments. It's not a certainty, but I think it's a risk that may happen. Brisbane's only just emerged from the latest surplus. It took maybe half a dozen years to absorb. And it's highly likely that developers are going to see opportunity in what's happening in the Brisbane market, particularly with a view towards the Olympics. And they're probably going to build too many apartments. That would be, I think, a reasonable expectation. I think you just need to be careful about inner city apartments with that in mind, and focus perhaps more on the housing markets. Now, specific locations that we like in terms of Brisbane overall, very much a hot market. It's going to continue to be a growth market for the foreseeable future for all the reasons I just outlined. And some of the locations I think will do well. We think the Redcliffe Peninsula in the north of Brisbane is very much underrated and undervalued. Most suburbs still have median prices between 450 and 550,000 relative to the lifestyle and office. I think it's pretty good value for money. Vacancy rate's very low. Lots of infrastructure spending happening in and around that area to elevate that market. There's a new university campus nearby, upgrades to road links. And so there's plenty of reasons why we think that there's going to be above average price growth in that Redcliffe Peninsula market. Not too far away, also in the north of Brisbane, there's a new university campus, which actually opened last year. It hasn't been able to operate and function normally because of COVID, of course, but when it is able to, it's going to have a big impact, a bit of a game changer for the nearby suburbs of Petrie and Launton, which are very affordable by capital city standards. Ultimately, there'll be about 10,000 students going to that facility. It's the Brisbane campus of the University of Sunshine Coast. Very low vacancies, good rental yields, prices starting to respond, as the figures on the screen show. Lots of good amenities, good basic infrastructure. It's on the commuter train route. There's lots of green spaces, some recreational lakes in the area. A very good lifestyle and an affordable price. That's another one to potentially target. Logan City, as I mentioned, has become one of the hottest parts of the Brisbane market. And that's interesting because perhaps 5 or 6 years ago, for various reasons, I think Logan City was the focus of seminars run by spruikers, and lots of investors bought property in Logan City, including small units, and have been very disappointed by the results because until very recently, there's been no capital growth, but now suddenly it's exploded. It's become one of the hottest, most frenetic markets in Brisbane. It's the urban bridge that connects central Brisbane to the Gold Coast, so it's a good location, lots of infrastructure, very affordable, and so it's now being targeted, and we're seeing people who put properties up for sale, selling very quickly for prices that way beyond what they expected. And so we're now starting to see the growth that the people had expected in Logan City, but only recently now started to be delivered. And it's an area that's going to be very positively impacted by major spending on new infrastructure, some of which are there listed on the screen. Typical pricing in Logan City, various suburbs, many of them still have median prices for houses in the 300,000s, a few a little bit more expensive in the 400,000s. Springwood's just over 500,000, but for the third largest city, capital city in the country, this is very affordable buying and pretty good rental yields. Vacancies are really low right throughout that precinct, and it's now being targeted big time by first home buyers, other types of home buyers, and investors. Even more affordable is Ipswich City, which is the southwestern fringe of the Brisbane metropolitan area. And in the next slide, I'll just show you some of the typical values there, but there's been a massive uplift we've noticed in our analysis in sales activity. It seemed early on that when Brisbane first started to rise, Ipswich City wasn't on board with the trend, but in the last in the last 6 months, it's really started to jump. Lots of big employment nodes out there, including the RAF base, major commercial industrial precincts. A lot of the people who work out there are working locally. They're not commuting into the centre of Brisbane. And vacancies, low. So typical pricing throughout there. Some of the suburbs throughout Ipswich City, you can see that a lot of them median prices in the 300,000 still. Some are still in the 200,000s, a few in the newer master plan communities like Springfield and Ripley, the pricing is more in the 400,000s. And you can see from the figures on the screen also that there has been some growth in the last 12 months. That's in the brackets is the median price growth in the last 12 months. So there's been some good growth, but it's not sort of at that 20%, 25% that we're seeing in other parts of Australia. I would also have to point out that some of those numbers you see on the screen, actually the reality of going into the market and trying to buy something, you have people trying to buy in Ipswich are finding that the market's become very, very busy, and things are selling very quickly, and the level of growth is now starting to exceed those sorts of numbers. Just bearing in mind that that comment that came out of some of the research done on Olympics, including PIPA, that and also from PRD, that suburbs close to the main venues of major events are the ones that tend to show the strongest price growth. A couple of those suburbs in Brisbane, close to the number one venue for the Olympics, will be suburbs like Annerley and Greenslopes. Now, they're inner southern suburbs, very close to the centre of Brisbane, close to that, to the Gabba. Good suburbs with good standard of housing. They tend to have pricing, median prices in the 800,000s, probably soon nudging up into the 900,000s. Major hospital there as part of the mix. You can go across the pedestrian bridge to the main campus for Queensland University, so that's also accessible there. Vacancy is low. We're starting to see sales activity picking up. So there's a couple of possibilities of suburbs that might get particular price uplift because of their association with the venues that will be part of the 2032 Olympic Games. So in summary, yeah, Brisbane, very much a rising market, benefits from having the virus under control, very active for first-home buyers because of affordability, an obvious beneficiary of the exodus to affordable lifestyle, which is seen in the population data. Vacancy is now very low and rents rising strongly. Gains a lot from interstate migration, more so than any other part of Australia, and it's the number one pick by investors according to the PIPA survey. The big uplift in infrastructure spending is a big factor that was previously missing, and the game changer, the ultimate game changer, is the announcement confirming that Brisbane will host the Olympics in about a decade's time, but with the impact starting pretty much now and extending for over the next 10 years. Now, for investors, if you want to find out more about Brisbane and the places that we recommend, you can purchase our Brisbane Hotspots report. That's for the average investor, but this special report that we've developed, Why Invest in Brisbane, this is a higher level report worth several $1,000s. It's a report for real estate businesses who have marketing, perhaps major projects in the Brisbane area, and might have a use for a report that explains in readable form with a lot of detail and a lot of factual information why Brisbane is the place to invest. We've developed this report, and it's a limited edition. We're selling only 5 copies only to clients who will receive a copy with their branding and contact details. And if you are a real estate business interested in perhaps exploring the possibility of getting a copy of that report with your branding to use as your own report, then you can make contact with us by phoning the number on the screen or sending an email to inquiries@hotspotting.com.au. Okay, so let's have a look at some of the questions that have been coming through. And there's plenty of comments. Charles, I guess, apropos the Olympics, is asking, how do you see Wollongabba? Plenty of apartments there. Will there be good growth given the Olympics? Well, as I've just discussed, the evidence suggests that the locations that have the main venues have particular focus on them, not just during the big event, but in the years leading up to it. And there tends to be elevated price growth in those, and that means Wollongabba, because that's where the main venue for the Olympic Games is situated. So there are plenty of apartments there. It's a bit of a mishmash of a suburb, Wollongabba, lots of commercial, lots of industrial, sporting venues, apartments, not that many houses on land, but those that exist are probably going to be very precious commodities. Neighbouring suburbs, perhaps East Brisbane, Coorparoo, And the ones I just mentioned in that slide just a few moments ago, places like Annerley and Greenslate very close by, more pure residential suburbs, more about houses on land rather than high-rise apartments like Wollongabba, they might be major beneficiaries. Michelle is asking, thanks for your comments. Michelle, we'll be sharing with attendees. Look, if anyone who'd like a copy of the slides, you could email the email address on screen, inquiries@hotspotting.com.au. The question that we get asked a lot, people who haven't been able to attend live or were watching live and then got called away because of some commitment. Is there a recording? We always record our webinars. Everyone who registers for the webinar will receive a recording, usually within 24 hours of the event. So if you have registered and for some reason you couldn't watch the event live or couldn't watch all of it, you will get that opportunity because we'll send you all a recording. There's a question here, can we depend on the data that's taken during COVID time, not a normal time? Do you think the math could be wrong? No, I don't think so. The methods of recording the data haven't changed, and COVID hasn't changed that. COVID has unleashed forces in the market that have certainly fed into this growth cycle. Many locations in Australia, media often says prices are growing despite COVID. In actual fact, it's not despite COVID, it's because of COVID, because COVID has unleashed forces into the market. But they're not the only forces that are in the market, but government stimulus measures, for example, as a response to COVID, expat Australians returning from COVID hotspots overseas, people fed up with lockdowns, migrating to other parts of Australia, out of Sydney and Melbourne, that's all part of the mix. But I don't think, but that trend, as I mentioned earlier, that exodus trend was underway long before COVID. It's a long-term trend, and it's not going to suddenly stop and reverse when COVID is dealt with. So I don't think the data is in any way misleading. It's just depicting a very, very strong national property boom in Australia, which, because of the multiple forces feeding it, I believe has some longevity. Normally saying thanks for relevant information. Thank you for your thank you. And look, asking all sorts of personal questions, which I'm not going to answer. What's your opinion of Yeppoon? Yeah, we do have a high opinion of Yeppoon. In fact, today or tomorrow, we will be publishing our new edition of the Exodus to Affordable Lifestyle Report, National Top 10, and Yeppoon will be included in that. You also mentioned you've produced a report for Adelaide. Should we consider Brisbane, Adelaide? Well, I think Adelaide's also got very good prospects. So too, there's other parts of Australia, there are many markets with growth prospects in Australia. I think Adelaide's very underrated, and I think is now starting to realise its potential. It's just a personal choice, or might depend on if you already own some property in Brisbane. I think diversity in a portfolio is a good idea. So you might focus on Adelaide or on Perth, or on a good regional area. Alan's asking, would I pick Perth or Brisbane as the better investment? Again, the answer depends on the individual. There's no one right answer to questions like that. If I had to make a choice myself or on behalf of a client, taking into account their personal situation, which can have an influence on the answer, I would prefer Brisbane. I think Perth's got good prospects. It's now a growth market. It's good value for money. But I think Brisbane's probably got the greater growth potential going forward. And it's also perhaps a less volatile market than Perth, which has an economy which is so hooked into the resources sector, which makes it a little bit volatile and sometimes vulnerable. David's asking, do you see the APRA changes to borrowing capacity impacting the property market? I think, David, it will have an impact. I think the impact at this point will be quite muted. It's not going to have a dramatic impact. I don't think it's intended to have a dramatic impact. It's just intended to take a little bit of the heat out of the market by perhaps removing those marginal borrowers from the equation. But I noticed that most of the people who have commented publicly, they tend to agree that the impact is going to be quite muted. And if the authorities want to, to really take the heat out of the property market, they're going to have to do a bit more. Roberto, thank you for your thank you. Brett, do you recommend buying established or building new as building costs have skyrocketed? Yeah, well, building costs have increased. There's a shortage of everything in Australia at the moment. Everything to do with building a house or an apartment, including tradespeople and materials and the supplies that go into dwelling construction. There's a shortage of pretty much everything. So building costs are rising, but so is the cost of established housing. So it's maybe a case of 6 of one and half a dozen of the other. The answer to that may be location specific, because it's not exactly the same situation everywhere in Australia. And Hill, thank you for your thank you. Also, Stephen, how do you rate investing in Adelaide compared to Brisbane? If you had to choose between the two, again, there's no one right answer. It depends on the individual. I rate Adelaide very highly. Perhaps right now I'd rate Brisbane a little bit higher, but Adelaide's a very good option. It's got even more affordable than Brisbane, even lower vacancies, even stronger rental yield. So there's an argument to invest in Adelaide. If I had to make a choice, all things being equal, I'd probably marginally go for Brisbane because of those extra factors that are in the mix, including the Olympic impact. How about the suburb of Strathpine? Well, yeah, that general area, there's all, I mentioned Petrie and Launton, but other nearby suburbs will get impact from what's happening up there, including the university campus. There's an improvement to other infrastructure there. And generally that Moreton Bay region in the north is attracting lots of buyers because it's affordable. There's close to major employment nodes. The transport links are good. There's all sorts of things in favour. So Strathpine is one of those places. There's nothing specific about Strathpine that elevates it above other suburbs, but it's just one of many that should have good prospects. Rosemary says, thanks, we'll be in touch. Love to hear from you, Rosemary. David's asking about unit ownership in Logan City. Doesn't seem a big talking point. Focus more on houses. Yeah, I mean, I think that the key thing is that given that houses are so affordable in throughout Logan City, generally speaking, if you get a house on a block of land in a growth market in the 300,000s, that's affordable to most investors. And so why would people be buying small units? It's not, fundamentally a unit market. It's a house on land market. There are some units and townhouses throughout there, but the history shows that they tend not to show the same level of capital growth. Houses on land do better, particularly in this area. So that's where most of the focus is. There's no real reason for most buyers to not buy a house on a block of land and to go for the small unit option. Franco asking, how concerning is the release of new land? Look, there is in some of those outer areas, Eastwood City, Logan City, there's land available. But I think the problem at the moment is that the land supply can't keep up with the demand. The developers, it takes time to get housing estates, subdivided land registered to the point where they can sell it, and but they just can't keep up at the moment. They would like to be able to produce it faster than they can, because there's demand that they can't satisfy at the moment. Franco, do you recommend buying established or new house and land? Look, I don't have a recommendation for one or the other. As I commented earlier, there's no one right answer to questions like that. It depends on the individual. I think there's also a place in every investment portfolio for a mix of both. You can buy established housing. You can also buy it in certain circumstances or certain locations, new house and land packages. I know plenty of investors have done very well in the current climate. People who have currently got houses under construction that's growing in value while it's being built, and some of those people have made substantial capital growth even before the thing's finished. So there's arguments, pros and cons of both, and the answer can often depend on the individual. So I can't provide a definitive answer to that kind of question. Pete says, do you recommend using a buyer's agent if people are buying it? So yeah, absolutely. I think, and particularly in the current climate where it's a very competitive market, sometimes frenetic, and it's very hard for the average punter, the average mum and dad home buyer or investor to actually cut through all that and be able to buy anything, but particularly sensibly. And so it's a good time, even more so now, perhaps more than ever before, to consider having a buyer's agent on your team. I think it's money well spent. Saves you a lot of time. These are people who are experienced and operating in all kinds of markets, so they can find hopefully the property that you want in the price range that you want it, and the location that you favour. So I'm personally a fan of using buyer's agents. Even though I've got lots of knowledge and expertise, I can do it myself, but I'm time poor. So I like to save that time. I'm happy to pay the fee for the buyer's agent. Which areas would you consider for houses under 400,000? Well, Daniel, there's part of what I've just presented, areas including Logan City, and Ipswich City in particular, some parts of the Moreton Bay region and north, and that price range. Question there about Macleay Island. Look, I haven't really applied any focus to it, but islands where you've got to get in a boat to get to, generally haven't been massive performers, but I can't give you a definitive answer. I haven't looked at it. Pete, Michelle saying to Pete, yes, definitely buyer's agent, I would agree. All right. What key data would you recommend available to determine if a market is the beginning or the end of a growth cycle? You could certainly look at our price predict index, because it classifies all the suburbs and locations throughout the country, whether they're rising, whether they're plateauing, or whether they're falling. That's based on sales volumes. That's one way to do it. But you can examine using data that's available, how much prices have grown, and see the last 3 years, the last 5 years. If prices have grown 100% in the last 5 years or 70% in the last 3 years, they've already had a lot of growth and might be getting towards the end of the cycle. Whereas if there's been relatively only, say, 20% in the last 3 years and 10% in the last 12 months, it's an indication that locations are towards the beginning of the cycle. Okay. Dia was asking, is the low vacancy rates due to COVID interstate migration? Actually, no, it's not. The conditions for low vacancy rates right across Australia, except for those inner city sort of CBD type markets in the big cities, those conditions have been created over the past, say, 5 years. It says vacancies becoming available are a function of investor buying. Investors have been out of the market primarily for the last 3, 4, 5 years. Investors haven't been a major force in the market. They've been massively discouraged by actions by APRA, by state governments, by the federal government changing the rules about depreciation, for example, about federal Labor in the last 2 federal elections has talked about disallowing negative gearing and making capital gains tax more. All of these things have combined to discourage investors, and investors have stayed out of the market. And over the last several years, vacancies have dropped and dropped because investors haven't been buying, creating new rental properties availability. And so we now have a point where most locations in Australia are 1% or lower. And it's actually not about COVID or interstate migration. It's much more long-term than that. So it's not going to go back to normal figures in a hurry, because you can't fix this problem in a hurry. And politicians don't even seem to be aware it's a problem, so they're not actually doing anything about it. They should be, but they're not. Okay. Anthony's asking for an estimate for the median price. I haven't done one. Anthony, all I can say is I believe that Brisbane will close the gap with Sydney and Melbourne. And you never know, it may close the gap completely with Melbourne. I don't think it'll catch Sydney up. But witness what Hobart's done. What Hobart used to be by far the cheapest of the 8 capital cities, and now it's more expensive than Perth, Adelaide, Darwin. It's suddenly become one of the most expensive cities in the country. Brisbane has the potential to do in the next 5, 10 years what Hobart's done in the last 5 years. Okay, we're actually already clicked over the hour, and we're getting towards that time where we should wrap it up. And there's still, there's dozens of questions I haven't got to, and I'm sorry, but we always get more questions than we can handle on these events, and I'm grateful for your interest and your interaction. I've dealt with quite a few of the questions, but we're just not going to have time to deal with all of them. For people who would like to follow up and have questions that whether I would like to have a more detailed discussion, because quite often people seek a one-line answer to a question that really, to get an answer that's really going to be helpful, it should be more of a detailed discussion. And I do offer, as a service, strategy sessions where you get to sit down and have a conversation about your situation and your most burning questions for 45 minutes. And I think, particularly in the current climate, that could be money well spent. Okay, so thanks everyone for your participation. I just refer again to, just a minute, for some reason, slides have disappeared. Okay, just refer again to that special report, Why Invest in Brisbane, just pointing out that that's not a report intended for everyday investors. It's a much more expensive report. It's a more corporate level report. It's for businesses that have an interest in Brisbane real estate and would like a report with their branding and contact details. The users their own that they can perhaps use as a selling tool or marketing document for Brisbane. And it's very strong credentials at the moment. So if anybody is interested in that, please phone the office or perhaps send an email to inquiries@hotspotting.com.au. Thank you everyone for participating today, for your attendance and for your questions and comments. Apologies again that we didn't get to answer all of them because there were so many, and we've already gone 10 minutes over the hour as it is. But again, thank you for your participation, and we will be doing another webinar in 2 weeks' time. We do them at this time, lunchtime, on a Wednesday every fortnight. So there'll be another one in 2 weeks' time. Okay, bye for now.